So we've been in real estate for over 15 years. And what we used to do is have these short-term plays to make quick little bits of cash. And what we realized is that those short-term plays just continue to take more and more and more of your time, and you're never really getting what your end goal, which is real wealth, true wealth and wealth preservation. So we spent all this time doing all these small deals, which we made a good amount of money on, but we've also lost significantly on stuff that was supposedly low risk that turns out to be a little bit higher risk investing. And what we realized over this term was that if we stop looking at things in 1 month or 1 year or even 2, 3, 4, 5 year increments, and we start looking at 10, 15, 20 years down the line, our risk tolerance significantly decreases. We no longer want to do high risk projects because what's the need for it? Yes, sometimes there's a high risk, high reward scenario and it does work out, but you should only do that if you have a bunch of extra money sitting around and you're just kind of going for it, right? If it's not going to matter if you lose that money because you already have other safe investments. So what we shifted our business model to is real wealth preservation. And wealth preservation happens with core assets, core Class A multifamily assets in great locations that are irreplaceable. And those assets are going to appreciate over the next 10, 15, 20 years higher than any of these other asset classes. You can still force appreciation on those assets. You can increase rents as market rents continue to go up. Certain markets, especially down in the Sun Belt, we are going to continue to see rent increases. Now, it might level off for a couple years, but if you're only thinking a couple years, you may think it's not a good investment. But if you're thinking 10, 15, 20 years down the line, and you realize, hey, we put $30 million into this project, we bought it for $100 million, in 10 years, this project's gonna be worth about $150 million. So we've now paid down some debt, we forced some appreciation, and we know that we can make safely 30, 40, 50 million bucks on our initial investment instead of thinking in the short term, like, hey, let's put $30 million into the short-term project and hope that it goes well. Well, look what happened with all of these multifamily projects that had bridge debt on them. They're all either falling into technical default or they're getting defaulted on, and their investors are losing everything that they put into it. So instead of thinking in these short-term increments, we've shifted our whole mindset and our whole investment strategy to be long-term. And that's going to give us a lot of risk mitigation and wealth preservation. So instead of in this consistent, create mode, we're now in preserve and wait. Buy the great assets and wait. That's going to have a much better payoff down the line. There's great tax benefits to it, and it significantly reduces our risk of losing ours and our investors' money.